Hi guys, this is Sarvesh from Aventus Research, and in this video we will be looking at one indicator that we have been testing, and I thought that I would like to share it with you guys. Maybe it might help you in your own trading as well. So these are a very small indicator, which is a combination of two EMAs, okay, which is exponential moving average. It is a very simple indicator, just to understand in which direction any crypto coin is going, and it might give a clearer idea of the overall general direction, if you may, for that particular coin. So there is a small setting that we got to do. So before that, you need to set up two EMAs on your trading view. If you want a good trading view subscription plan, you can check it out in our description. You can click on the link and you can get a special discount through that link for trading view subscription plan if you already don't have a premium plan of TradingView, which I highly recommend if you are a professional trader and if you are seriously looking out to make money in the crypto market, right? So first, you need to go ahead and basically set up two exponential moving averages. Okay, if you double click on this moving average exponential, you will be basically provided with two options. Then what you got to do is you have to come into the input section, keep a length of 24, and keep the source. Now this is very important. You have to keep the source as open, high, low, close by divided by 4. So basically it will take the average of the entire candle. By default this will be at close, so technically by default it will be calculating the exponential moving average using the close price of any particular candle for which time frame that you have chosen. But we have to make sure that you change it to open, high, low, close 4, which is basically the average of the entire candle. Here you don't have to bother about the smoothing process. That's fine, you can just keep it SMA 5 and put OK. And if you want, you can keep the style as blue color as I have kept it for 24, just so that it is easier for you to quickly read. Then similarly you can go to the next EMA and make the length as 60, and again set up the source at open, high, low, close divided by 4 and keep the SMA same. Okay, now here's the simple strategy. So what is the simple strategy? That when EMA 24 is above EMA 60, basically it means that the fast moving average is above the slow moving average, and we have to then see where the price is going of the candle spot price. Now over here on 29th of January, Bitcoin 1 day candle, so this is a 1 day time frame. So Bitcoin 1 day candle had crossed over above the 24 EMA, but we will not buy as of yet. Okay, we will wait to buy a the Bitcoin or any other coin based on this setup. When there is a crossover, we will keep it on our checklist, and then whenever it will give a candle where the high of the candle is above the high of the crossover candle, okay, and the candle in which you are looking to take the entry, the low of that candle should be above the 24 EMA. Okay, there are two parameters. Again, I would, if you want, I can just type it down. So the first parameter is that the candle, entry candle, I would say, entry candle should be closing above high of crossover candle. Okay, so here, if you see, on the 7th of February, the high of Bitcoin for 1 day was 44,430. You can check it out over here at this level. Okay, here you can check out. And then the second condition that we need to see is that the entry candle low is greater than greater than, sorry, where is the greater sign? Okay, is greater than the 24 EMA. Okay. If these two parameters are fulfilled, that means that you have got a great setup. Now, how you can keep the trade? Okay. Now let's look at what trade position that you can consider if you get this kind of a entry level or entry setup. So you need to keep the stop loss at the 24 EMA. So here it is. Okay. You have to keep the stop loss at 24 EMA, which is approximately 3.95%, so approximately 4%. And we need to keep 3x of that as the target. So we are looking at a risk to reward ratio of approximately 3. Here we have the risk to reward ratio of 3. The stop loss is around 4%, and the target is around 12%. So in this scenario, on 7th of February, using this simple strategy, if you had gone long on Bitcoin futures or Bitcoin options or even spot for that matter, and if you had kept a 4% stop loss with a 12% target, your target has got achieved on 12th of February, which is around, you can say, how many days? In about 5 days. So 5 days you have made 12% return, and let's say you had taken exposure of even 30% of your portfolio, then 30% into 12% is about 3.6%. So you would have made about 3.5% profit on your entire portfolio, just using this strategy in 5 days. Okay. Now then you can use this strategy for intraday as well. Okay, same basic concept. uh, you can use this strategy on intraday level using a 1 hour candle or a 2 hour candle or a 3 hour candle, or you can also look at longer time frames where your objective is to stay invested in that particular coin for a long time. Okay, so typically you would get this 60 EMA after November 2019, because 60 EMA is essentially 60 months. On a monthly candle, it will basically calculate the exponential moving average for 60 months, which is 5 years, right? So it's a long time frame on a monthly candle, but it principally will still work similar to how we have calculated. So if you see over here in November 2023, we got an entry in Bitcoin, and in fact we had given the trade to our clients as well here. Oh, okay, what is this? This is not the indicator that I'm looking for. You want a long position indicator. Okay, so here it is, right? So the stop loss was around 23%, and the target is around 60%, you can say, and we are very close to the target. And the target, all the Bitcoin enthusiasts may be happy to know that the target is around 59,000. Target is around 59,000 level for Bitcoin. So if that gets achieved in maybe 2-3 months from now, then definitely it will be a very, very positive thing for Bitcoin investors. And if you see from November end till now, we already have about 37% profit using this strategy on a monthly candle. So this is a strategy that I call as the 2460 crossover, and it's definitely a strategy that has almost, for what I have tested on multiple crypto coins, I have tested this strategy and it gives about 70% accuracy, which is very good. And the most important part is that you can easily get a 2:1, or even sometimes even 3:1 risk reward ratio, which is basically what makes your strategy most profitable, is your risk reward ratio. Okay, so I hope you found value in this video, and if you found value, then do like and subscribe to our channel if you haven't. And a brief about my company: we are Aventus Research. We basically are a crypto specialist company. We provide trading signals for crypto, and we also provide copy trading services to our clients. You can check all of this in the description box. And you can join our Telegram channel, which is free, where we post some free signals, some sample signals that we also provide to our premium subscribers. Okay, so this Telegram channel you can join for free and get to know what are the type of trading signals that we post in our premium channel, and what could be the potential for you and your trading using our crypto signals. So this is all about what I had to discuss for today. And thank you for your time. And I'll see you in the next crypto related video and our daily crypto market analysis. Until then, goodbye and keep trading. Bye.